Hey everybody, Dave here, Hidden Freedom Investing. In today's video, I'm going to put on a PMCC, a poor man's covered call on Pepsi. I've been following this stock for the last few days here. We had two big days of drop here. And, they had earnings this week. And I didn't even look at the earnings, but it was just a stock I was following anyway. And I thought it would be a good stock to put a PMCC on. It's getting down near a price where I think it would be pretty good. Specifically right around this 34 would be a pretty good number or a pretty good price to put the PMCC on. So it is about 135 right now. And if we go into my broker here, we can see Pepsi right here, 134.93. Let's go over to my dividend portfolio because this is all the stocks in my dividend portfolio. Obviously, this is not the account that I hold my dividend stocks in. I hold that in the Schwab account, but I have them on here because I watch this count every day live as it's, the stock market is open. But this is Pepsi right here. This is on a daily chart. And all this funky stuff in the background is just the Ikichimoku cloud. But here's the 2 days of drop, or actually 4 days of drop, earnings. And then today we've kind of dropped down below the support level here. But it's getting close to where I'd want to put a PMCC on. So we're going to just put a PMCC on. It is Thursday, it is during the middle of the day. And I'm just going to take time out of my day from working to put this video out to show you the process that I go through to put a poor man's covered call on. So let's go ahead and put one on Pepsi. So I'm kind of looking forward to it, actually. First thing we're going to do is going to use a tool that I built. So it's an API tool that I built for interactive brokers. Do you need to use this tool? No, you don't. It's just something I built to make it a little bit easier to do the math. So let's go ahead and run the tool. So let's talk about it. This ticker is Pepsi. EL is expiry for the long call. So it's 2023, January 20th. And then we got the expiry for the short call. I'm going to do 1 month out. So today is February 11th. We will do 2021 March 12th. Strikes, I already looked at the strikes. I'm going to do a short call on the 136, and I'm going to do a long call on the 90, but we're going to just run the math on that because this tool will just run the math for me. We'll do two contracts in there as well. We'll hit enter, and this will just go around and check all the strikes and get the prices and do the math for me, so I don't have to do it. So first is actually just calculating the days to expiration on the short call. That's 29 days. Now it's looking at the long call, and that's 708 days. I'm literally almost about 2 years out. Not quite 2 years at this point, but the current stock price was 134. So what we're going to look at here is I'm looking at the 90. So here's the 90 right here. This is the long call. Okay. And it's going to do the math for me. It's going to take the bid and the ask and it's kind of do the mid price at 45.73. And we have a delta of about 0.97. We have a break even of 135.72. And then we got an extrinsic value of 89 at 0.89 cents. So what we're trying to look for here is we want to get down low enough where we can try to remove a lot of that extrinsic value. So I could go down to a 75 and get it down to 19 cents, and we can get it down to we go down to 80 strike, we get it down to 26 cents. Obviously that would actually reduce our cash on cash return because it's more money invested. So I'm kind of just really want to kind of split the difference there. I'm not too worried about this 89 cents. There's a 54 cents here, but obviously with the spreads and all that, I probably wouldn't get it down to 54 cents because obviously I would go with the 95 probably, right? But most likely the spread is just going to raise that up. But so what we're looking at is I'm looking at doing a 90. All right, so that's 89 cents of extrinsic value, and we did a 136 because our break even is 135.72. So we just need to be above that break even there, right? And that's including commissions, but it's already calculated in there. I just did a default of about $1 per contract. So as long as we're above 135.72, so that puts us at 136. 136 is up here. Mid price is about 244. So that puts us in the profit zone there. And literally gives us about $486 in premium for 30 days hold time, about 29 days hold time, and total cash invested is about $91.46, and cash on cash return is 5.3% for those 30 days. All right, so that's good reason why we want to do this PMCC, right? I'm not really going to go into details about PMCCs and, the pros and cons and all. That's not that's out of the scope of this particular video. But I want to put this PMCC on, so I just want to talk about the numbers here. Can you calculate all this stuff by hand? Yes, you can. Basically, I'm just taking the mid price plus the strike price there, subtracting it against the current price, and that's how you get the break even and then in extrinsic value. So yes, you can do this without this tool here. This is just a Python script that I built to make it a little bit easier for me. But so these are probably the strikes I'm going to end up going with, 136 and 90. And if we're looking at here at the chart, this is pretty much, I think, a good price. Because look at all the sticky points here, right? It was finding right around, dodging around that 134 area right there. So that's pretty much where I want to be on this particular stock. And we're close to it. Obviously, FinViz is a little bit behind. I think it's delayed by 15 minutes. So let's go ahead and look at my broker here. We'll look at the options. Let's see. We're going to go to Pepsi here, PEP. And we're going to put the long call on first. So we're going to go to January 2023. We're looking at the 90. Here's the 90 right here. And let's see, January 2023, 90. We want it on the call side, not the put side. That would be a major mistake. So here's the 90 right here. We'll click on the bid first. And I'm going to do 2 contracts, and I'm going to go for the mid price first. And because I'm buying these, I'm going to try to get lower than the mid price first. All right, so let's try to get down. Let's see, 145. Let's see, 45 to 30. Yeah, that's a big spread right there. So let's try to get with let's try to do 44 at first. I don't think that's going to hit, but we can try it. So let's try to buy the 44. And that did not take. There's our that is our order right there. It did not take at 44, so we're going to try to walk this up in, say, 10-cent increments or something like that. 44.10 until this thing hits. So right now the mid is still 45.45, and on my tool we had the mid price at, let's see, 90. It was 45.73. So let's just raise this up to 44.20. Let's just do 44.30 first. See if that takes. That did not take. So let's do 44.40. 44. Oops. Made a mistake there. So 44.40. Let's try that next. 44.40. And that did not take. I'm trying to get a better price than the mid price. And obviously, you just have to keep playing with it because there's such a big spread there. And let's do 44.60 and see if that, because that's still better than what my tool showed as the mid price. So that did not take. We can probably go up to all the way up to 45 at this point. So I'm just going to type in 45. There's 45 right there. That did not take as well. So still the mid price is 45.90 at this point. Let's do 45.25. Okay, so we got taken at 45.25 at this point. Now we need to put the short call on. So on my tool, I selected the 136, right? So we did 45, and that was still a lot better than the leap cost basis that I had here in my tool. Maybe I'll modify this tool to actually let me put the numbers in directly that I got, just to figure out the math for me, but that's out of the scope of this video as well. So let's put the short call on. That's the 136 going out to March 12th. All right, so we're going back to the options here, and let's just make sure that my other script is running here in the background. It is. This just updates, it just takes the orders and then fills in my spreadsheet automatically for me. There it goes right there, filling in the spreadsheet automatically for me, so I don't have to do that. And it looks like that script is done. Okay, so let's go ahead and pop back into the broker. And we're going to go to Pepsi. We're going to do March 12th. Let's see, March 12th. We're going to do the 136. All right, here's 136 right here. This should get filled a lot easier, so I don't have to worry too much about it. We're going to do 2 contracts. And we're going to do pretty much the mid price of what, 232. We have the mid price here. What was the mid price here? 136, 136, 244. So not quite as much premium. That's because the stock has come down since I've made this video. So we want to get the most price out of this one. So we're going to go a little bit higher if we can. So mid's 232. We'll do like 24. Let's just 237. We'll start there. We don't want to buy. We want to sell these. So let's sell to open. So let's go back to where the order is. There, the order did not get filled at 237. So let's drop that down to 235. And that didn't get taken at 235. Let's do 233. It did not get taken at 233. The mid price keeps dropping on me, and that's because I'm too slow here. Let's do 230. Okay, we got taken at 230. So now, let's see, just make sure this script is running here. This script will automatically populate my Google Sheets database, or if you want to call it that, Google Sheets sheet for me. And it has about a 20-second delay there. Okay, there it did. It find the order, it's finding the fill. It's going to go ahead and populate this JSON data here into the Google Sheets. If we go to Google Sheets, it's added a new line there, and it's automatically populating that for me. So the only thing the last thing to do at this point is just to put in PMCC information over here. I'm just going to copy one because I just put one on yesterday in Merck. We'll just copy these 2 lines, and we'll just paste them up here. So we'll do paste, and then we'll just do values only. So because I put the short call on last. So this one is the long call right here. I bought that call. All right, buy to open, and then this one here was the short call, so we did a sell. It was a sell to open. So at this point, the PMCC is on, and I'm running quite a few PMCCs at this point. And these are all the PMCCs I have on at this point: a VFC, T, PFE, Pepsi, Merck, and KMB. So that wraps up this video. I hope you enjoyed me, just going through the process that I do to put a PMCC, or poor man's covered call, on Pepsi. And maybe when I close this PMCC out, I will make another video midday. So if you have any comments, questions, or concerns, go ahead and leave me a comment below. You can hit me up on Instagram, Twitter, or email. Certainly leave a comment below as well. So go ahead and like and subscribe. We'll see you in the next video. Thanks for watching.